Welcome back. Well, let's talk about a couple of companies now. Zensar Technologies is on our radar. The company has acquired 100% stake in US Bridgeview Life Sciences to boost their healthcare and life sciences focus. To discuss all this about the new acquisition and the business in general, we have with us Pratik Maroo, who's the head of the healthcare and life sciences vertical at Zensar Technologies. Pratik, hi, welcome to the show. Well, if you could just start by giving us a sense in terms of what is the rationale behind this particular acquisition, how much does it boost your capability in healthcare, and how much is healthcare probably going to contribute going forward? It's currently around 9.5% of sales.
Hey, thank you, and it's a pleasure to be here. The primary reason for the acquisition is our intent to boost our capability into the healthcare sector, particularly in the pharma, commercial, and product launch space. We expect this is a growth play for us, so it's not about adding the revenue for this quarter or next quarter. It's about building the capability that helps us drive future growth. We expect to get to close to the 10% revenue in a quarter post-acquisition. But we expect stronger growth as we continue based on this acquisition.
What is this growth? Because, I mean, you also have, to make a payment of around $11 million by December 2027, contingent on some performance. So what we're trying to understand is, what is this performance? What is the milestone that you have here? If you could quantify that for us. And with this money that you're paying, how much is the kind of return that you expect?
Yeah, so we have typical to acquisitions like this, we've set up internal thresholds of the performance, and we would measure the progress very closely on how well the acquisition is doing. We've not disclosed the specific terms and milestones, but this is something that we are setting internal governance at our end to ensure that we meet the performance benchmark. We also would continue to look for other acquisitions. So this is a template that we're following. This has been successful for us in past when we've done the acquisition has yielded the result.
We're not asking you to, divulge internal information or confidential information here, but you are paying upfront $14 million. A couple of years from now, you would be paying another $11 million. So net, $25 million would be the total cost of acquisition. As a result of which, what is the kind of IRR that you're looking at? That's what investors would like to know.
Yeah. So this is certainly the business case is built on ensuring that the IRR from the acquisition is higher than the cost of capital that we're deploying. We don't disclose the specific growth number associated with any acquisition, but it's certainly positive for the margin, certainly positive for the revenue growth. And we expect to deliver within the HLS space, we expect to deliver higher than the company average growth.
So when is the integration expected, and it will be margin and EPS accretive from day one?
Yes, that is correct.
When will the integration be effective?
So we have laid out a 3-year plan, as it was mentioned as well, right? There is $11 billion of payout happening in 3-year terms. So the integration is going to be, we are going to be doing certain part of integration at an accelerated mode, primarily around the account and customer relationship. So those takes priority. So the internal operations activities, the financial integration, the back office integration, that will happen slowly over the period, culminating in 3 years.
Okay, and you said it's margin accretive. Could you give us a sense of how much, what are the kind of margins on this near 13 million revenue that this company does?
Yeah, so again, we've not disclosed those specific terms, so I'm constrained by mentioning any numbers. But the only thing I can mention at this stage is that this is margin accretive, and this adds to the Zensar margin.
Okay, give us a sense in terms of the access that you would get with this particular acquisition. For example, what is the clientele like? Would you get access to Fortune 500 companies? Are you likely to bag larger deal sizes? What is the expectation once there is this integration which is complete, and what this particular acquisition really brings to the table for you?
Yeah, certainly. And that's the most interesting part for us. Part of the acquisition, we're obviously getting strong capability in pharma commercial domain and Viva technology, Viva cloud, but also a good access to the clientele. And these are the clients where Bridgeview has done meaningful work in helping those clients in the journey of the product commercialization, doing the launches, and so on. For their size, they've been extremely effective in building the portfolio of the small and medium-sized companies, which is one product, pharma and biotech. But they also have companies which are in the top 15 pharma. So part of the transaction, we are inheriting those relationships, and obvious intent is to grow. The future segment that we would be focused more on is continuing going to be on the small and medium sector in the pharma and biotech. So the ideal candidate for us would be small companies which have some innovative drugs, therapy in the market, and they're looking for help on the commercialization of those products. So we become the preferred partner, the partner of choice for them to help them on the product launch.
Right. You said that this is margin accretive. Last time you did margins of closer to 15%, so one assumes that it will be more than that. But at around $13 million, this is about 2% of your current revenue. So what we're trying to also understand is that, what are the kind of cross-selling opportunities that you have here, upselling opportunities, and what is the scale that you can bring to this business, and how much bigger can you make it, say, over the next 4 or 5 years?
Yeah. So again, we don't give the forward-looking guidance on the revenue, so I'm constrained of what I can share. But when you look at the client portfolio, and we've done the analysis at client-by-client level, there's a good amount of synergy there. We don't have an overlap of existing clients, so we're not in a situation where we have to cannibalize revenue in any sense. This is all driven toward the growth. As you may also have noticed, Bridgeview Life Sciences, the current portfolio that they have is primarily focused with the on-site resources that they have. Augmenting them with the global scale and the offshore capability that Zensar brings to the table, this becomes a highly synergistic for Bridgeview business as well. So we expect to grow both sides of the revenue profile, the standalone revenue for Bridgeview, but also the revenue at the Zensar, our legacy portfolio.
Okay. All right, Pratik, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's Zensar Technologies talking about their latest acquisition. Need to take a short break. On the other side, a commodity segment, Manisha Gupta will be connecting with Nirav Desai, partner at GGN Research, to discuss the edible oil industry wish list from the budget.